What is up, guys? It's your boy GRC. Am I sweaty or did I shower? That is the question of the day. Just kidding. I'm live every single day, 11 a.m. Eastern. I am the greatest crypto show that I know about, but that's just my perspective. And today we're going to get into something a little technical. At the end, we're going to share some cool info with the group. I call it, whatever our group is, just the young guys that love to talk in Telegram and work through all this info, really. And it's Crypto Sloth. I like Crypto Sloth. I always liked Crypto Sloth. I didn't know if he was smart. I didn't know if he was in school, but the guy was smiling ear to ear. He said, I don't have much, but I'm having a good time. And I was like, yep, he's going to make it, because he's happy. He knows he has work to do, and he knows he's already done a lot of work, and he's like, life is good. Let's learn some stuff. And I totally feel the same way. I just, when it comes to these really nuanced topics, guys, if you're new, you're going to get lost. But the more you stare at this information and hear it for the next opportunity, for this one, whether you're ready for whatever, this is not financial advice, by the way. You just want to be aware of the thing. A year ago, I told my dad about all this stuff, and yesterday or the other day at breakfast, he looked at me and he said, so Ethereum does that. He's like, what is Pulse Chain then? And I was like, man, just from listening, even passively, you can start to get some ideas in your head that can help you move forward. Because if you don't know the detail, you'll get swallowed up in this market, unless you're just like on some trading bot. So I'm going to get into it. I'm going to put my hands in the air like the police are after me. Bullish. What is up, Sam? How are you doing?
Oh, I just shoved food in my mouth right before we went out here. I am doing awesome, though. I'm really looking forward to this conversation. We've got Sloth coming on, and this is going to be a ton of fun. We're effectively still in launch phase for ICOSA. And because the nuances within that system, and there's nuances underneath that on Hedron, it's a little bit hard for some people to grasp, or it takes a little bit more time to kind of like let all that settle in and distill in so people get a better grasp of it. And who better to talk to than Sloth? So I'm really looking forward to
about sloths. They're patient.
There he is.
What's up, guys? How's it going?
How you doing?
Dude, I'm doing well. I don't have much, but I'm happy to be here.
And I'm just saying, like, as a college kid, man, you're in college. Like, you can't, how many hours are in the day? You're very open with your situation. You have no reason to be. No one knows where you're from, who your parents are, who they're not, blah, blah, blah. But you say, why can't you see that transparency is the way to what you want. And you want to feel it here while you go.
Yeah.
And that's why I love having you on the show. But I'm going to cut through some BS. If people do not know who Crypto Sloth is, Crypto Sloth, would you like to introduce yourself?
Yeah. So I'm Crypto Sloth. I'm just some guy on the internet talking about things that interest me. And that just happens to be crypto right now. A lot of cool stuff happening in the crypto space. I really enjoy Hex. I really enjoy Hedron. I really enjoy ICOSA. And so essentially what I do is I think about things and then I distill those thoughts into some kind of digestible format and I share it online. And I've been really fortunate to have a lot of people recently like what I have to say and have been enjoying my content. So, and I've been fortunate to have people like you guys having me on to talk and chat about all this stuff. So if you want to learn more about, Hex, ICOSA, Hedron, anything else crypto-wise, I'm probably going to start talking GameFi in the future once all this
and
ICOSA
future
stuff.
I mean, God, there could be 10 more things in this ecosystem within months. You're pretty much you're saying you would like to keep up with that. You'd like to make that part of your schedule.
Yeah, pretty much whatever things that interest me, and like I come up with things like for myself. I just like publish it, like make it public. It's kind of, I don't know if you guys have seen that book, like what was it? Show Your Work. It's like this like really like short, like kind of almost infographic book. But basically the whole idea is like if you're like are coming up with ideas and you're like having thoughts, writing them down, etc., you might as well just publish it. Like you might as well put it online at the very least, it distills your thoughts so you understand what you're thinking better. But the flip side of it is because online marketing, online businesses have become such a more prominent thing in our day-to-day lives. Like, you might as well try for it. You might as well go for it. See what happens. And so that's just what I've been. That was the genesis of like me wanting to start my stuff.
It's also very easy to do because financially wise, like you don't need as much equipment.
That's I like that idea. There's a podcast that I don't listen to a lot of like YouTube videos anymore, but I do listen to podcasts sometimes when I'm working in the house or I'm doing some remodeling stuff or listen to audiobooks. And the podcast is these two guys, and they're in tech, and they just talk about different ideas they have for shit. And it's fascinating. It's interesting. It's not the typical take you get on things. Yes, they're focused on business. Yes, they're focused on like making money and things like that. But they just talk about cool different business ideas using technology or different companies that they find that are pretty cool. I find the podcast interesting. And that book you just mentioned is something. I didn't reference that book, but they talked about that idea of just putting out whatever it is because it's a sounding board. Some people like the idea, some people won't, and you end up like flexing that muscle so your creativity actually gets easier, or be able to think creatively is easier for you to do when you do it on a regular basis.
Yeah, exactly.
I want to do it all in a studio. I want a studio so bad, bro. Dude, I want a studio so bad, bro. Dude, I'm like a studio and a clip studio away from running this shit, but that's on me. I got it's
I would love to have.
I love the studio. I want to be able to I want to see Sam in person. I want to meet people in person, and you can still do your daily content without meeting anyone. And I love that proposition for some reason. And I can have an excuse to get out of this fucking shithole that I live in. Not so, my house is beautiful, but like the street's not beautiful.
I was about to say, I love the city you're in, man. I love the city.
We should get a beer too on that.
We should.
But so let's talk about WAATSA. Let's cut right through it. And I'm going to back up right after I say this statement. Sam, I want you to get into what you know about WAATSA and what you have questions about. I think the questions for me start to come out at like it's hard to like see the potential of something into the future that it's like massive gains in your face. So sometimes it's like, like what's going to happen, right? Like what could go wrong? But again, we're dealing with software here. So you got to remember that. And in very picky software people in this community, there's a certain code you kind of have to abide by to get the okay from some people. And I think, what are your questions about the potential, what's going on now, the number of participants, etc.?
So, Chad Donnerschwantz, I know GRC does. I don't know if Sloth is. He's in the comments a lot, which awesome dude. I think it's him that I'm chatting with on Instagram. Might be somebody else, but his name is Chad. I think it's the same person. And he told me that, because I wasn't really super interested in the NFT portion of ICOSA for myself, right? Cool idea. Love it. I think it's awesome. I think that lots of people should make some money on there. But it wasn't super interesting to me. And then he's like, yeah, the yield on this thing is fucking great. It's 18%. And I don't know if it was per day or in the
first day.
The first day you got 17% back.
Yeah.
And then it's been coming down since then. But when you think about that, that means that in about 5-6 days, your money's doubling, right? So if you have 17%, 18% per day for 6 days in a row, your shit's basically doubling. And I don't know what it is currently now, but it's like, I like returns. And that's a pretty quick doubling. So I am fascinated to learn about it more so. So effectively you are, and please, I'm just going to put out there what I think. And then Sloth, I want to hear your thoughts because there's a lot more nuance behind this. You donate and then you get an NFT, and this NFT gives you a place in this pool of everybody who has one of those, proportion to the size of your donation to this pool. Now, from there, this gets a yield from ICOSA. So this is based upon how much Hedron is actually burnt. I believe, and I don't know the specifics, but I'm sure Sloth can enlighten us with that. And then you can't claim your shit, or if you do claim your shit, you don't have an NFT.
right? So you could flip your NFT and sell that to somebody, but then you have to find somebody who knows what that is. And if you go to OpenSea, 99.9% of people are going to have no effing idea what that is. So the best way would probably be to go through and claim it. And it's whoever that yield that was going to that one individual who did claim now goes to everybody else in the pool, because nobody else can enter the pool, meaning that at some point the amount of yield to the individual like NFT holder, if the pool's, I think somebody said 14,000 people have entered so far, or 14,000 addresses.
That was the first 4 days, so this is day 8.
This means that this could be pretty tall order in terms of returns.
Yeah, I think it's.
That's why I wanted to in the pre-show before we came live, guys. I wanted to ask about the pricing floor for ICOSA, because that's what it's kind of going to hinge on. And the more I'm thinking about it, I'm like, this is a lot of like inflation on here. Yes, I know. I believe it's always going to inflate, but it's supposed to inflate at a decreasing rate as time goes on. But I would love to see like more support on the floor piece of it. What are your thoughts on the NFT portion of it, but also the floor portion of ICOSA and pricing underneath it?
Yeah, so you described the whole thing perfectly well. The idea is it's a limited time pool that is and your share of that pool is represented as an NFT. And if you wanted to cash in on that yield, you have to give up yield going into the future. And so the idea is that, okay, so this pool is open for 14 days, and then afterwards you can never be diluted in the pool ever again, because it's locked. And after that day 14 ticks over to day 15, nobody can enter the pool. And so juxtaposing that to the other pools, the ICOSA and Hedron pool, you can get diluted. Anybody can add principal to their stake. It resets their stake time, and now they have more points. And so because of that, you are kind of always incentivized to add capital to your stakes. But you might not want to do that because you may have to wait longer to get your capital. It all depends on your specific situation. So the main thing that the WAATSA NFT is incentivizing is not incentivizing. The main thing that appeals to people about the WAATSA NFT is like easy kind of autopilot inflation within the system, because as people burn their NFTs, your position gets larger. Yeah, that's all correct. And so a lot of people have really started to like this. They're like, oh, whoa, I see the potential in this. Like I have to give up principal now. Like I have to take a loss immediately because you don't get to keep your principal in this pool. But in the future, as people start to burn their NFTs, as potentially the rate of ICOSA, the payment, the minting of it via the burning mechanism of Hedron goes up, maybe we could be getting a lot, because more people are it's going to be harder to compete in these other pools. But my position relative to everybody else in the WAATSA pool is set forever. And so that's what a lot of people are speculating on, and it's been doing very well so far. Yeah. What
about some of those yield concerns people are going to have here? Or I know people have been mentioning it, because, you can't be certain of the adoption rate on some of these things.
Yeah. And so I think a lot of people have gone in pretty heavy into the WAATSA pool. Like a lot of people have put a decent amount of money into it. And I would say if you haven't done it or you're considering doing it, there's two things to make sure you just understand that you're doing. As one, your principal's gone, so you don't get that back. So your yield at some point has to recoup the money that you sent to the address. And then two, you don't ever get to capture that yield unless you want to give up your yield in the future. Now that second part's really important. One, because this pool, I like to call it like the Schrodinger's cat of yield. Like you both have the yield and don't at the same time. Because if you want to get the yield, you have to give up future yield. But if you want future yield, you don't get your returns now. So it's like that same kind of principle in the pool.
What happens to all the funds people use to donate to get the NFTs? It's not really a donation.
Yeah, it's think of it like an adoption amplifier kind of thing, where you give money away and then you get this other thing in return. So you can think of it as like a purchase. But no expectations. Like the wallet owns those coins. Whatever that entity who owns the private keys of that coins does with it is their prerogative, and we have no control or right to ask or demand anything of it. So you are giving you're giving away your money to whoever owns this wallet.
This is uber speculative. That's why you cannot understand what we're saying.
Now, here's the second part. The second part of what I just said. That if you burn the NFT, you get your yield back. that specific mechanic of the NFT pool has generated a very common strategy for a lot of people, and that is making multiple NFTs over like if you have $1,000, making 10 $100 ones instead of like one $1,000 ones.
Is
Now,
it? What can you question just on the semantics of that? So can you do that all from one wallet? You have to do 10 different wallets.
You can do as many from one wallet as you want. So
okay, cool. Good to know.
You can make one wallet per one transaction.
And
so
that's
you can't
that's the little alpha bead too, guys. Like don't drop if you don't have that much limited funds and you're going to be sending money into there, you'd rather do it where you had some optionality in the way that you exit.
Yes.
So you wouldn't be forced, because you'll get your hand forced, right? If nothing's go wrong on the feet, you're going to have to force your hand at some point. Wouldn't you rather force it to a pool of 20 rather than to get the whole thing and then no more explosive face melting?
What we could do is we could put together a site and we will purchase your NFT. And because people are going to want to sell these things, we will purchase them, and just make sure there's like a 10% discount to whatever is selling in the marketplace. If you need liquidity, we'll buy them at a 10% discount.
Oh, well, so that may not,
marketplace.
That may not work, Sam.
Which way, please?
Trying to buy these things at a discount. These things may never sell for a discount, these NFTs. And I'll tell you why. Because inherently, they're actually always liquid. So because at any point in time, you can burn the NFT to get the underlying yield, then you're getting an ERC20. And ERC20s are highly liquid because you can just sell it on the market immediately. So because the time, so you understand. By the time you burn the NFT, you can always get the ERC20s immediately whenever you want. So if that's the case, why would you ever sell this thing on the market for less than what it's worth if you have to burn it? Like if there's an emergency and like you need liquidity now, you can't wait to sell it. You can just sell the ICOSA, the underlying ICOSA.
We would actually have to purchase it at a premium.
Yeah. If you want to lock in a lower premium than it might be later after ICOSA goes up or more yield is generated, then that's what it would have to be. But I personally don't think these will ever sell at a discount, simply because if you can get these things at a discount, you're getting a steal. Like you're getting free money is essentially what it is.
No, it would have to be at a premium.
It's kind of like Maxi. Like you get a way better deal, but like it's not dropping under one.
Yeah. Where was I going with that? Okay, so here's the thought. The NFTs have to be burned to get the yield. And then because of that, a common strategy has come where you are making multiple NFTs, because if the price ever goes up, hopefully it does, we think it will, and you have generated this yield, you are going to want to cash in on those gains at some point. Like it's natural. Like you have real life things to do, or you want to buy more hacks. Like it could be whatever reason. You don't want that ICOSA anymore. You don't want to have to nuke your entire position, especially because you're never going to be able to get back in. Like once you run out of these NFTs, like you're done. You're like we just talked about with Sam, you're paying a premium to get back into the game.
Never a fun proposition. It's like, oh yeah, I had a 20 trillion Hedron. I got to buy back 1 trillion, and I sold it all. And 38 times more expensive than what I said. But I promise I got a good deal on it.
He's talking to somebody specific.
No,
I'm just kidding.
But that's how value is formed. If Sloth's whole opinion on this thing changed. If Hedron never had that price dip, that was oversold. We all saw it. It was fucking tanked, and it was okay. It was like, no, I don't think anyone was sweating it. That was really paying attention. I was happy. I was like 7 zeros, man. This is good. Should I buy like 1 trillion of this or like 3 of these? And like this is attached to a B share. Like, are you like, I started to get some of that. And I just think it's a really good opportunity to learn out of everything. Like whether you're not spending all your money on this stuff, it doesn't make a difference. But if you can learn these systems intimately enough, you can be super well prepared for stuff in the future.
Yeah. Okay. Sorry. I have a specific point I'm getting to. I'm just laying the premises first. So NFTs are burned. Strategy has come where you make multiple of them. And so people have been doing this because they want to be able to cash in on this yield that they're getting in the future. But what does that mean? That means like the zeitgeist or like the main strategy for this NFT is like, well, some of them are going to be burned later. So even though the pool may seem to be inflated right now, that's just a function of two things. One, it's really popular. People are seeing the value prop of it, but people are also creating their bags in a way in which that they will be able to dump later on. They will be able to burn their NFTs to realize some of their gains. Well, what does that mean? That means any NFTs that you have kept along the way as people have burned them are now more valuable. So the pool may be a little more inflated because people are able to get in now. There's FOMO. There's a capped time where you're ever able to get in. So it's like, when you get somebody like limited time offer, like you're like, oh yeah, take my money now. I don't want to miss out. And then add on top of that people are getting enough NFTs to burn later. I think longer term, like mid to long term, this thing is going to be a great hold over time as long as you don't burn your NFT. So I wouldn't be scared about the large amount of capital that's been entering, because the fundamental value of it is on a large enough time frame, and people are positioning themselves in a way where you will have more later because people are burning their NFTs. But my advice generally, I know other people have given opposite advice, is to just put in what you're willing to hold for 10 to 15 years comfortably. Like that's the game I'm playing with this. I put the money in that I'm like, this money's gone. Whatever yield I get, but I'm not really counting it because I never want to cash it in unless things get really stupid. And even then, I'm trying to position my other bags so I never actually have to step into this finite bag that I have. My long-term goal for this is like for these NFTs to one day be collateral for loans, to be able to do whatever I need to in my real life off these NFTs. Because just like HSI stakes are like decentralized trustless yield generating assets, these ICOSA WAATSA NFTs are also decentralized trustless yield generating assets that we know for 100% the next day is going to have more ICOSA in them than the previous day.
Hold on. Whoa. Collateral, loans, future. Yes.
That's the potential I see for these NFTs.
But that's a lot. Okay. And I've had somebody chirping about that concept to me behind the scenes. So I kind of know exactly what you're talking about, but I just didn't know why or how. But I guess some of the software implications of the decentralized nature of it make it feasible that we could create a system around that could, or it could fit into a system already that would accept or use that as collateral, depending on like a lot of factors, but someone would do it.
The mechanism isn't there now, but I'm betting that it will in the future.
It's about to happen up in fucking my house.
That is, so think about this for a second though. Independent of tax consequences.
Are you gonna be here? Oh, sorry.
We'll mute it. What Sloth is saying is 100% possible, and the idea of this, that little hinge right there, is it changes the dynamics 100%. Because what does that allow you to do? Even if you, independent of tax consequences, right? We're not going to even cover that right now. But if you're borrowing against assets, you effectively are not paying taxes, right? So it's a tax-free transaction for you, versus selling would be a taxable event.
Yep.
But this allows you to extract value without ever selling or burning your NFT. And if this gets to a point, if this little, what Slotcher said is like, what is the reason why I'm going to put money into this pool tomorrow?
Yeah, I've been trying to tell you, but I didn't know how to tell you yet. I was trying to tell him. I was like, do multiple. There's functionality at the end of this. I don't know exactly what it is yet.
Because you could think you could extract value that you don't have to pay taxes on, and you don't have to sell your shit, and you don't have to destroy your shit. Like, that is a very, 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 very interesting proposition. Not available today, but if hypothetically there's 14,000 transactions or NFTs created, so maybe there's let's say 3,000 people who did that, 4,000, 5,000 people who actually did that, then that means that at some point it is going to be in somebody's best interest to create what Sloth just said. Because if I have an NFT that is worth $13 million, it is in my best interest. And I know that shit. Okay, well, tomorrow it is going to increase, another $4,000 or $8,000. It is in my best interest to retain that thing because I know how it works and take out a loan against it, whether it's I create that or I pay for somebody to create that or whatever the case is.
Somebody will create that for you because you're going to have money and they're going to want to give you a loan.
And there's incentive. Sorry, go ahead. Finish your thought.
No, but it's so true. Like, if Sam, we're loan sharks. That's what we do for a living. All our best friends just have these flying nuke balls of decentralized currency that they want to like collateralize, and they're just totally liquid. And it's just like, oh, cool. Like, thanks. Can we do the
people are
transaction?
like economically incentive to like create leverage or like loan opportunities for people who own these assets, because at the end of the day, they want to own these assets. So what's a way to do it? We'll give them leverage and maybe they'll F up and then they get the asset, right? Like,
So what I hear you saying is, let's start working on this project right now, Sloth, and we will keep you guys posted as we do this, as we move forward, because this is the opportunity. This is an opportunity. It needs to be solved. You saw it probably before most people did. And I think that we can, I know that we can actually go through and solve this. So let's take this and move this into actual fruition so that there is that option on there and make it really, really dope, right? Because it's going to only be a small subset of people who use it, but to those people, it is going to be extremely, extremely valuable. I love that. Now, this is all predicated on the value of ICOSA.
yes.
Right. So we have a pretty firm ceiling on ICOSA from the ARB. Right. So for people who are listening and you're not sure, so I'll have Seth. I'll have Sloth. I was just talking to my buddy Seth. Sorry about that. I'll have Sloth tell you what that ARB is. And then there's a slight floor. It's like a wobbly floor. It's like a plank of a floor, but it is still there and it's still solid. It's just not super fantastically like as great as the ceiling is. And that's where this is all predicated on, because of, you know what I mean? Like we talked about, I'll tell my idea after you share those two things, but what are your thoughts on the floor piece? Can you talk about the ARB? What is the ARB, why it's there, and then the floor underneath it?
Yeah. So yeah, that's a great point. And this is something I've been thinking about a lot lately for my upcoming stream that I'm going to do, and whenever that comes. But basically, the intrinsic value of ICOSA is directly connected to Hex, and it's directly created to the B share. And I think more specifically, it's directly correlated to how much it costs to make a new stake today, like at any given time. And the reason why that is because of an arbitration point, and that's pretty easy to understand. If you could take $1,000 and put it into Hex, 5555 it, and then sell it to the ICOSA contract, and then take that ICOSA and sell it for $1,200, well, then anybody who's going to do that, if that opportunity is available, anybody who's able to do that and knows about it is going to do it, because they just immediately profit $200. And so that is the ceiling of the price, because anytime the price goes higher than whatever that point is for ICOSA to be worth more than what it is to stake it and obtain it via the native mechanism. And so I'm just native mechanism, whenever I say that from now on, just means buying Hex, staking it, and then selling it to the contract. That's what I'm going to use to refer to that. So then if the price of ICOSA via the native method of getting it is higher than it is off the market, then people are going to do that to bring the price down, because they immediately profit off of that price differential or that market inefficiency. Now that's a hard ceiling. Like, the force of arbitration is an incredibly powerful force that, because people are economically incentivized to do it, it's just gonna happen. We can pretty much
I love that you can find human nature through these points, like, because you don't know this until you're all the way in it and you do some of it yourself too. Like, you've been influenced to press the buy button on some stuff maybe prematurely. It's just the way life is, because you got to get to figure stuff out. But it's crazy. It's I forgot my point.
Understanding human psychology.
Yeah, dude. It's like, you're basically, so when you play games, right? This is my best example. When you play video games with microtransactions, like RuneScape 3, for example, it makes it so easy for you to purchase. I say this all the time, but like, it almost could magically scoop your money. It's so easy. It's like you just like open the front end and like somehow like the purchase page is up.
GRC, are you buying daily spins?
No spins. No, I went on. I got excited for like a week about it, and then I was like, it's not fun. It's because you can just pay for everything.
You got to go to old school RuneScape, man.
I know. But anyway, like, you could see, like, I could tell what other humans are doing within these front ends, because I did it myself in the beginning when I was really excited. And then you realize about these arbitrage points, there's guys that just look for arbitrage value in certain communities, and they just sit there and they arb, and they have a lot of money. So it's like, if they take a little loss, it's not like, it's whatever.
Yeah.
So there's
that's the
a
ceiling.
good ceiling.
That's the ceiling. Now, there's also
No,
a
you're
floor. You're good, man. You're
Yeah,
good.
you're good, dude. You're good.
There's a ceiling and then there's a floor. Now, technically, they're the same thing. Like the ceiling is the floor because it's the same price point, but it's a different mechanism that sets why it wouldn't go below that price versus why it would go above. Now, the reason why what that floor is, and I personally think it's a little more sturdy than a plank, Sam, but
Yeah.
I'm just messing with you. That lies in in the staking mechanism of ICOSA. So there is a specific pool via the ICOSA contract that earns more ICOSA as well as earns Hedron based on the amount of ICOSA that you stake. Now, anybody at any point in time can take Hex and obtain ICOSA via the native mechanism, and then that price is locked. Like whatever the price of Hex is, just dictates that price purely by math. If the price of ICOSA ever goes below that fair value price, that equilibrium price, you are able to get a larger position in that ICOSA pool relative to when that price differential didn't exist. So everybody has the same opportunity to get the same amount, a similar amount of ICOSA at any point in time, based on how much money you can buy Hex with, stake it, and then get ICOSA. When the price goes below that point, let's say the price point's $1. That's the equilibrium point. If it goes to 50 cents, you can now get twice the amount of ICOSA to enter that pool than you would have previously if it was at $1. So you are able to take the coins that people didn't want, say that their stake ended, they took their yield and they sold it on the market. You are able to get a new position in the ICOSA pool much cheaper than you would have been able to if you just had the HSI buyback mechanism. So it's a way to get ahead of other people in the ICOSA pool. That's the thing that sets the floor. Now, why is that important? Well, presumably, the yield in this pool needs to incentivize people to take advantage of that opportunity. And so we have the normal ICOSA distribution. They previously burnt B shares, Hedron divided by the T-share rate, but we also have Hedron that is being distributed to this pool. And I think that's really important because it adds an extra value proposition to this pool. So we all saw what happened on day one of the ICOSA launch, where a bunch of HSIs were sent to the contract to get ICOSA to stake because it was day one. Well, that day had a huge payout in Hedron. Now, we could see this kind of payout, maybe not to the same magnitude, but maybe of similar magnitude going on in the future. You know, we have a whole bunch of stakes coming out sometime in November. Maybe some of those get recycled because they want ICOSA via the HSI buyback mechanism. And so not only does the burning of ICOSA or burning of Hedron generate you ICOSA, and your ability to get ICOSA determines how much of that yield you'll get, but there's also a drip of Hedron that comes on the same time. So that floor is basically set by how powerfully or how much are people incentivized to get that yield. And this is why Sam is saying it's a little bit more flimsy, because the R point is like you make money now, you make money today, and everybody wants to make money now and today. The other one is like, well, people are going to have to want ICOSA, and people are going to have to want Hedron, and they're going to have to lock up this coin to do so. Yeah.
I totally understand what you're saying. I'm so curious on how incentivized people are going to be to use those two pools, the top pools on the front end. If you go down to ICOSA and look, it's going to say, so there's going to be 3 bars. If you go down to ICOSA, you click it, there's going to be 2 pools right there in your face. Boom. It's going to say Hedron staking. It's going to say ICOSA staking. Sam, in your opinion, personally, the only negative I ever found with the thing is I was like, I didn't realize it had that system before I put it in where you lose your premium and it's burned. I mean, I probably did, but I didn't think about it, I guess. But I didn't care because it was just, I was never put in more than I was learning still. So Sam, what do you think the effectiveness of those short-term pools? We have options like Hex staking. There is great yield there. Okay. And that's longer term anyway. Right, Sam? Like it's kind of like, oh, you want to do a year and a half, 5 years, 3 years. What do you think about those 30, 60, 90-day staking pools with those two really speculative assets?
Well, what you just described, and thank you for the correction, both of you guys, for the donation, because you're effectively purchasing something. So thank you for GOC bringing that up, and then Sloth for your, because I clearly wasn't speaking about it correctly. So thank you for that. And as you said that, an idea
came into my mind around a zero coupon bond, where if you go through pricing a bond, it is effectively discounting future cash flows to today's dollars. And if you think about that, it is very similar to this NFT, where the future cash flows are not going to be coming in a coupon payment on a semi-annual or annual basis, but they're going to be coming on a lump sum basis when the NFT is burnt, when the NFT is sold, or when there's value taken out through a loan against the NFT. And I didn't necessarily think about that more than just right now as I came to it. So I'm not sure how I'm going to probably think about that more tonight. I'd love to hear what your thoughts are, because that is a very interesting, because I've done DCA models. I'm sorry, discounted cash flow models, DCF or whatever it is, models for cash flows and bonds, or single payment bond, or even companies. And
No idea what that is.
If you think about like a company or a stock or anything, in finance world, it's effectively the future cash flows that thing is going to generate discounted back. Why is it discounted back? Because if you think about $1,000, would you rather have $1,000 today, or
Yes.
Yeah, or 1,000?
Yeah.
Yeah.
I'm just messing.
True, that is the answer. $1,000 today or $1,000 in a year from today. You would rather have $1,000 today.
I wish this was in crypto. Right now. I wish all of it was in crypto. And guys, if you ever want a good way not to pay your mortgage, get a bigger house. Get a bigger house than you need, and then rent the part out where you'll never see the motherfuckers in your life. And then they give you money under your door. It's fun.
That is dope. I like the way that you set that up, like how the house hacking, so to speak. But with it, when it comes to a bond, I don't know. This is very interesting, and I got to think more about this. If you have any thoughts on this, Sloth, or GC, I'm curious, because it's to discount this back, right? So you can put in any amount, and then the growth of that over time is just going to be, pretty. It's going to, assuming that there's any success of ICOSA, right? So that means usage, but also demand.
Stability.
Because like there has to be some demand for ICOSA for it to be successful. Otherwise, it's just you're earning a yield in something that's not fucking valuable. But I don't know. Very, very interesting way of taking a look at this as a bond.
Yeah. And so, I think you're not wrong in that the floor is flimsier than the ceiling. But I think it's just because of how strong that ceiling is. Like it's like about as powerful of a ceiling as you could, as powerful of a force to set a foundation or a structure as you could possibly have, just like pure art. And so anything less than that just seems like flimsier. But I think it's also important to keep in mind the context of ICOSA as a whole, right? So we had the supply of this coin start at zero. And because the supply started at zero, the only way for people to initially get into this pool was via selling HSIs to the ICOSA contract. Now, for the first 30 days, no ICOSA from yield is coming out at all. But the ICOSA that's coming out from the yield, from the people who sold their HSIs to that system, are the smallest players in that system. They're the ones. It's actually like less than like 6 ICOSA. Something like that. Like I think there's about 700,000 ICOSA. The total supply is about 700,000, and so I think the position that you would need to be a turtle, which is like the 30-day thing, it's like 70 or 7, which is basically nothing. So everybody is pretty much over the 30-day period. So only the smallest players are getting their yield first, and then every, I believe, 60 or 90 days, the next size player is getting their yield. But that's just delaying the time between now or the launch and when the large amount of yield supply is coming out. And that does a couple of things. First, it gives the time system to solidify itself. So when the whales are ending their position in about 360 days, if we have a whole year of price history on the chart where it has been stable to that price that it needs to be, that psychologically in people's minds makes it worth that in a way, because they see it throughout all of history. and it's not like a normal stable coin where like it's good but it breaks and then it destroys everything, because you can always exchange this ICOSA token for yield. So there is some like direct redeemability there that's not directly tied to the stability of the price. But if we have a whole year of price history where it stays, more likely than not, at least maybe this is just me, I will see it as an opportunity to buy rather than the price is breaking from its actual point. And that could last. The price breaking could last long. Like maybe it won't like go down and like immediately bounce up. Maybe it lasts for, let's say, like 6 months where the price is below that. That's 6 months time of like accumulation to get a higher position in this pool if you have a long-term vision for the entire system.
You know how Richard Hart always
Does that
says,
make sense? Sorry.
yeah, no, it does. No, and I'm going to tie it in. You know how Richard always says, you know, we always think about the downside of stuff when we're explaining it out to people. Why don't you think about the nuclear upside? Like, why don't you think about the nuclear upside? So we have these two pools, and anyone in the world can enter these pools. Any human on this fucking earth. And you're going to talk about too many sellers. You guys are so small-minded. If you really believed in this, you would say to yourself, this was airdropped from the B share rate or whatever, you know, you would do the math in your head. But I'm just saying, like, people expect Hex to do fucking nuclear gains, but it's just extremely heavier than a Hedron, just like Ethereum is extremely heavy compared to Hex. So people are going to move into these tighter liquidity assets when things are pumping. You trust on me. You trust on me, fam. And I'm not going to talk too much more because I don't want, but that they're going to move into those assets when they're taking advantage of the low liquidity, and then they're going to move back out to the.
That's good.
Let me ask you, Sam. From everything I've just said, like where are you at based on like where you were before and kind of after I kind of said all the stuff that I said? What are you thinking right now?
I'm more bullish on Hedron than I am on price appreciation of ICOSA because I feel that's under market value, relatively speaking, to where things are. If there's any tiny bit of usage for ICOSA platform, and assuming that like there's demand for staking on the platform, I think that there's far greater appreciation of the price from the actual token standpoint for Hedron than there is ICOSA. So I'm more bullish on Hedron. But I would like to ask you about the ICOSA. Thank you for pointing it out. Like to you be like GRC is like, hey, why don't you guys focus on the upside? And I do want to ask you a question about the upside of this. ICOSA, is that going to follow the trajectory of Hex, right? So if you, how I'm thinking about it, right, a 10x in Hex or 100x in Hex is a substantial move, right? So that's going to be a big price. So if you're at 5 cents, right, 10x is 50 cents, right, or $5 at 100x. And because the I haven't run the numbers specifically with how it's actually calculated, but the ICOSA price is it should follow that to some, it's going to be correlated with that to some degree. I haven't run the numbers because it could be like, 75% of that with a decreasing rate over time. I haven't run the numbers or actually modeled any of that out. Have you thought about that or ran any of those numbers exactly?
Yeah. So you're absolutely right. It will track the price of Hex with some delta in there as well. So the HSI buyback, because it's all correlated to the HSI buyback formula. Like whatever price that thing sets, that's kind of what that theoretical stable value should be at. And so what that formula is the advanceable Hedron divided by the T-share rate. Now, what that means is...
what's... I'm sorry, I'm going to, because I haven't gone into the formula pieces. I've heard you talk about it a couple of times, but I haven't taken the time to ask questions to cement those. Okay, so the advanceable Hedron, so just say that there's 5 billion Hedron that is advanceable on some HSI stake, right? So you have 5 billion Hedron. What is the T-share rate? Is that the 21 or 23,000 Hex per T-share rate? Is that the rate you're looking at?
Yeah, it's a 23,231, but the actual numbers divided by is 232,310. That's because in Solidity there are no decimals.
Okay, so can you repeat that again? So you're taking the T-share rate that is in like basically go to hex.com.
Yeah.
That T-share rate for a 1 day T-share, taking that rate and then there's a little bit of rounding error because of how Solidity is coded. So is that whatever the rate is there? Is there what's the way to think about the rounding error?
Well, okay. So here's the technical thing. It's advanceable hedron divided by the T-share rate times 10. And so technically the T-share rate is 232,310. But when you multiply, which because it's on the denominator, decreases your amount of ICOSA yield by 10 if you were just doing the normal T-share rate. But because the whole thing is multiplied by 10, it's as if you're dividing by 23,230 in the first place.
So the formula, one way to think about the formula is the advanceable divided by the T-share rate, then multiplied times 10.
Yes, that's technically what's written in the code. Yeah.
Okay. So that's written in code. Okay. And with the T-share rate, with the rounding on that piece of it, the semantics of that, does that mean that let's pull up this? It looked like you had it up on your screen, but Bullish, can you tell us what the T-share rate currently is, or pull it up for a second?
23,000.
Actually, is there any way we could pause for 5 minutes and you could gather your thoughts and then we can have a final 10 minutes? Is that cool? So let me do a 5-minute thing real quick so I can cover my bases so I don't get that feeling of impending doom when I don't work hard enough. Okay. Guys, I am going to transition. We know there's been PulseCon FUD. I do not care about it. Of course, the funds people lost, I definitely do care. Well, I mean, care is a weird word, but I wish that did not occur. But the golf tournament stuff, just so you know, is on. Like, it's on. Everyone going, I think. I'm excited. I'm going to play the promo. Guys, if you're in here and you have not retweeted this out, do me a favor and retweet this out. We have a solid bunch of guys here. Sloss VIP on the channel. He can come on.
Yes, he is.
And because, I mean, thank you so much, Sloss, for taking your time, taking your life seriously.
It's really nice to be here for like a solid chunk of time instead of me running between classes on my lunch break. Like, all right, let me see what I can get in for like 10 minutes and then hop off.
It's incredible that you have the emotional fitness to stay up, if you know what I mean. Like, good mood. Your parents must have, I don't know anything about your parents, obviously, but it's hard to do, man. You're doing a lot of work. It's easy to feel sorry for yourself, right?
Mm-hmm.
And I don't have everything I want. Man, I don't have that girl or whatever it is at the time for everyone. It's all the same shit. I don't have that girl. You know how many rich guys tell me I'm not doing shit right, but they would kill themselves for a chick that doesn't even like them? You know what I mean? It's like, guys, focus on your purpose. Let the other stuff come to you. Be a leader in your life. Anyway, golf tournament, guys. 104, guys. I'll be right back. KSB.TV presents the Pulse Masters Golf Tournament. We have 2 shotgun times, 7:30 a.m. and 1:30 p.m. Registration is 1 hour prior. The Concord course offers a 7,034-yard par 72 layout with Bermuda fairways and large greens. The spectator pass is $55. The individual golfer is $195. In the golf foursome, $750. Play Golf Network with others and win crypto prizes. September 5th, 2022. Contact us at ksbtv/golf. bullish, bullish, bullish.
I love the
That was
essential
incredible.
music.
I
That
want
was
you
a-
guys to know my hands were not in play while that was occurring. Everything that went on right there was behind the scenes, all the transitions. Everyone biceps in the chat for bullish.
Absolutely.
There was a nice interlude to get back into the conversation here with the semantics of the formula for minting ICOSA from the HSI contract. In what we were just talking about, so if there's a HSI that has a advanceable hedron of approximately 5 billion hedron,
Mhm.
or it'd probably be 500 million or something, right? But say if it was 5 billion and the current T-share rate is 23,231, then you divide 5 billion by 23,231 and you multiply that times 10.
No, if you divide by 23,231, then that's just what it is. Yeah, that's what you're getting.
That's what you get. Okay.
So what you sent me in the private chat, 5 billion divided by 23,231, that's the output. And then there are bonuses too that you could potentially get.
So what does that have to do with the decimal place? Like why do you people talk about solidity?
I probably shouldn't have mentioned it, but originally when Alex wrote it, it would be 5 billion divided by 232,310 because of the way Solidity is coded. Later on, he decided to 10x the amount of ICOSA you can get via the HSI buybacks, just to make the yield of it or the output of ICOSA closer to the staking of it, closer to the staking yield that you would get. So he wanted to bring those two outputs kind of closer together, kind of provide incentivize people to provide liquidity more, like give people the HSI buyback so like they have more coins to provide liquidity with, stuff like that. I shouldn't have mentioned it. I should have just said T-shares. That was my bad for confusing people.
No, that's right.
That's just the sequence in my head when I think about it.
Something on this show that went so far down the rabbit hole that we felt like it's crazy because like no one knows what you're saying. Then you say no one knows what you're saying, and they're like, oh, that crossed the line there. No, but again, I want to simplify what you guys are saying a bit, if you don't mind. And you guys are incredible so far. And this is just like, it's like if there's a dictionary, there's one for this, and people haven't read it yet. So it's like you got to know these words. But can you talk about some of those yield that you're? What are you talking about exactly, Sam? Yeah, I've been playing with the comments a little bit, but I kind of with you. But what are you trying to get at?
Me?
Yeah, with like the numbers in the chat.
Because I wanted to just understand what is going on, because then you get a better idea of, if I have a better picture of the world than other people, then I get to make a better decision.
I know where that little that tangent was the context of that. I was trying to describe like the projection of like ICOSA price relative to Hex. That's the phenomenon I was describing. If you remember that was the conversation.
Yes. Okay. Please. Yes.
Yeah. And so the reason why I brought up the formula is because of the denominator, the T-share rate. So you have the advanceable hedron part of it, and that kind of like sets part of the price. But because the T-share rate is always going up, even the same amount, the same stake that has say like 10 T-shares in it, it's going to get less ICOSA over time, even if you resell it 2 or 3 times, because that T-share rate is going up. And so, but what that's also going to do is set that base rate for ICOSA, that arbitration point, that fair value point is going to always send it up a little bit, because you're going to get less ICOSA over time simply because the T-share rate goes up. And that's what's it's going to track the price of Hex, but it's going to separate by that. Or let's see, which way should I do it? It's going to track the price of Hex, but it's also going to separate a little by little as the T-share rate goes up, because it gets natively or intrinsically more expensive as the T-share rate goes up.
Does the copy aspect of this? Oh my god! So we get a copy of all this on the Pulse chain, and I can't stop thinking about those NFTs and the copies, because those NFTs have so much weight, in my opinion. And then you get those copies, and then I'm like, what the fuck? Like how risk on of the asset, or how speculative, or how little users until nobody's providing liquidity? It feels like it just can't happen. It feels like people are going to provide liquidity between them. Like all of these things, like all of them. I'm not talking about that was just what I was thinking about. But in general, when you copy all these things into 2 and have them on 2 systems, there's technically 0 value on the other side. Mm-hmm. Does it have automatic value in your opinion? Some of these, you don't have to mention those specific ones, but some of these things that are getting a little more down the like less liquid kind of.
Are you asking if the pulse
Like
chain copies of the coins will have value?
Yeah, like I know they'll have value. Like is it guaranteed that all these things have value on the other side, in your opinion?
If Hex has value on these other things, then Icosa and Hedron will have value too, just intrinsically to how they're designed.
Right, and that's just because there's opportunity there, and people are going to naturally have to provide liquidity.
Yeah, and say eHex dies on Ethereum once Pulse Chain launches because all the attention goes over there. Well, that's opportunity to people to get more yield on the Ethereum side of Hex than before, and so presumably some money will flow over there just because the delta between how much yield you can get on Pulse Chain versus Ethereum is so great that now people are going to buy it up. Like the value prop hasn't changed at all, so therefore people will still want it.
There'll be some self-selecting in terms of like the people willing to pay higher fees are going to be people who have higher bags, right? So there's going to be some self-selection in like in terms of like who is going to take advantage of the yield differential between Pulse, if there is, right, between Pulse and Ethereum Hex, right? Because those could fluctuate. So you were saying the price of Icosa, you see that tracking the T-share
rate
in terms of the appreciation?
Yes. Like if you go to I don't remember what site it is, but there's a site where it has the current T-share rate, like its chart, and it also has the projected T-share rate. And basically the Icosa chart is going to look exactly the same, pretty much, theoretically.
Is it because it's going up at a slower rate? The only way that would actually be more convex, right, than the T-share rate if that was coming, linearly out, the demand would have to be increasing, right? Because it would actually be concave downwards, not upwards. Was that right? Where you have an asymptote line, right? So say Hex T-shares, right? They're going up.
Educated.
Hex is the T-share rate is just going to continue to go up and climb, right? I think I don't know what how specifically graphed out that is, but because it's a ratio which Icosa's minted at, that's going to be decreasing over time. So instead of going up, concaving up this way, it's probably going to concave out this way to a flattening, right?
Yeah.
Okay, interesting. That's fascinating. But when I think about these from a price appreciation standpoint, and I'm looking at because I want X's, right? Like I look at Icosa, and then you're like, okay, this is going to track the T-share rate. I look at Hex, right? We believe that that's probably going to go up too, but there's a lot of weight there relative to Hedron, right? And then I look at Hedron, and it's just like, oh my goodness, this thing is like
a butterfly.
It's
like light as a feather.
And shit, I don't know if I think in the last 48 hours it's up like 30 or 40%.
I haven't checked the markets at all. All I know is
Hex and Hedron bounced pretty hard.
Up?
Yeah.
From the 3.7 low yesterday, what did we get up to? Bottom wick was 3.7 yesterday.
Yeah, let's see.
Anyone snipe that in the comment?
We're at 2,000 for 5 zeros in 2023, and Hex is basically 5 cents.
Oh wow! Whoa, golly! Those traders are getting steaks tonight. They say that, as they say in the street. Those traders are getting steaks, and they're waiting to sell right again.
Yeah, well, so I have a point for what you were just saying, Sam, and I think you're right. The upside of Icosa is capped, at least more obviously so than Hedron. I will say this: Hedron does have a ceiling cap too, and that is its fair value point. It's just so low, so far below it right now, where there's just more opportunity. But there is a ceiling there. Now, with Icosa, the price appreciation of it comes with the price appreciation of Hex, because it's tied to the value of Hex. As the value of Hex goes up, that will automatically bring whatever the ratio of the coins would be below its fair value, and then people would presumably buy it up on the way up because you can get it cheaper that way, presumably.
Howard, I want to hear the ceiling thoughts on Hedron, but to before we get into that, it's one of the ways that I almost am thinking about it is Icosa and Hex here, and if you take a rubber band between these two, right, so it's tied to each one of my fingers, and you pull the rubber band down here, that is what is Hedron right now, where it's gonna fucking pop because there's virtually no liquidity for it whatsoever, and demand's increasing, supply is decreasing. Like you have these just like the perfect storm of things that are all happening at the same time, and you're like, what is going on right now? But what is the ceiling? Can you talk about the ceiling, because it's not something we've talked about really on the show?
Yeah, so the ceiling is simply the it's an arbitration point as well. It's the exact same as actually ICOSA. So say you could go on the market and take $1,000, buy hex, stake it through an HSI 5555, and then that advanceable hedron that you get is worth more than the $1,000. It's worth $1,200. Well, just like before with ICOSA, you would take your stake, take an advance on it, get your hedron, immediately sell it on the market, and congratulations, you have $1,200 for $1,000 out of thin air. And that's what the ceiling is, because then the price would get sold down to where it's equal to that fair value point.
Would it though? And I'm not saying, because I haven't thought about this right for a while at least. Okay, so you have that $1,000 HSI that you put in from a hex standpoint, and you can mint out, or you can advance out hedron that is $1,200, right? So you have $1,200 that you can go sell in the marketplace right now, and take that $1,200 and create another hex stake, but you still own that previous hex stake. So think about what you're saying right here, because what ends up happening in that circumstance? If I have $1,000 hex stake and I minted $1,200 of hedron, I can go create a $1,200 HSI stake that I can mint, say, $1,300. What am I going to do with that $1,300? I can pay off the $1,200, and then I can just repeat the process back and forth, right? But that's not. I'm going to continue to do that over and over again, but
so the price doesn't make sense to do it anymore. Yeah. Well, so it may not stay that way forever, because the price is going to go down. Like the hedron price is going to go down. Like when you sell your hedron, the price goes down, and people are going to be doing that until the price makes it so that you can't do that anymore. And that's why it's a ceiling. So like but you could just pay off the loan with that new hex stake that you made, right? So you'll be able to presumably, well, if, and this is if, well, no, because if you're making it at the same time, the T-share rate would be the same. So if you have more money, then you would be able to get simply the same amount of T-shares. And as long as you're staking it 5555, then you're going to be able to get even more advanceable hedron back. But base, what's happening? Well, more hex is being locked 5555, right? So the first thing you did, the very first iteration of it, you took hex, locked it 55555, got your hedron back, and then you bought more hex with it, locked it 5555. Okay, and now you have two hex stakes that before, all this hex that was on the market is now locked up for 15 years. So even if you get to keep them, the price of hex has now gone up. Presumably, if enough people do it to move the price. So if the price then goes up, then that floor, that ceiling, is now a little bit higher than it was before. So you're selling down the hedron price and performing actions that will kind of bring that hex price up. So the next time this opportunity would present, the hedron price would then have to be higher. But also you have to think, maybe not everybody will. Maybe people will do it.
Well, not necessarily. The hedron price wouldn't necessarily have to be higher, because the B share rate is going to go down, which means that there's less advanceable hedron, which is so that would be kind of like.
Well, if you get less,
right?
But if you get less advanceable hedron, you need the price to be higher.
Oh yeah, gotcha. Thank you. You were about to say something, and I interrupted you, please. If I didn't lose track of that. Now
that is one thing you can do. Like, so do it one time, get your $1,200, make a new stake, advance, pay off your loan. So if one that's going to burn hedron, because paying off a loan is a hedron burn, so that's going to give you some ICOSA yield as people do that at the same time. But also there might be people who don't do that. They just take the $1,200 home because maybe that money wasn't allocated to 15-year stakes. Like, it was new money. It was just fresh USDC that they had that wasn't going into a 15-year stake. So they don't care about the 15-year stake as much. They just care that they have more USDC because that was that part of their portfolio. Well, at least some percentage, presumably a higher percentage of those stakes that get made because of the arbitrage opportunity are then going to end up on the liquidation auction to then burn hedron. So, but what that's doing is, like, you have this short-term arb point that brings the hedron down, but in long term, in 90 days, more hedron is going to be burnt than what was taken in the advance in the first place, simply due to the fact that you're bidding on the hedron in the HSI and the hex that's in it as well. So net, taking advantage of the hedron sealing, if it ever like cracks it, ends up with more hedron being burnt down the line.
And is there any sort of floor, depending, I mean, like whether you think it's, weak or strong or whatever the case is, under the price of hedron?
Yeah. Well, so now the floor would theoretically actually be the same as the ICOSA because we have a staking pool. And actually, it's good that we're talking about this now. I was thinking about all of this stuff not too long ago, like yesterday or 2 days ago on a drive. So it's good that we're talking about it. I can get all these thoughts out, like verbalize them.
Yeah, this is awesome.
But
I
actually,
love this.
well, I thought about it, and like hedron and ICOSA are kind of like, when you think about it, fundamentally like the exact same thing. And I have a big stream that I'm planning where I kind of like outline this whole like thesis on the entire system and how we can use it to like pump hex to like forever. And it does it in a way that it's actually like, if you're trying, basically what I'm trying to prove is that if you do the thing that's best for you and your bags, then hex will pump forever. Like the thing that is most selfish to do is the thing that's best for everybody. That's what I'm going to try to argue for in my next stream. But anyways, the floor for hedron is basically the same as ICOSA because there's a staking pool now, but it's not as strong as the ICOSA pool because so many other people have hedron immediately as well through their mintable stakes. It's a little easier. It's easier to get hedron than it is ICOSA because you don't have to necessarily give up your hex stake to get hedron. You just have to wait. But with ICOSA, the first people to get it, you needed to give up your stake to get the ICOSA.
But that's only at the initial, because now it's on the marketplace. So at T equals 0, yes, right. But now, after that period of time, you can go buy, and there is some liquidity, but there's also there's very low liquidity with hedron. Like even at like a couple $100, there's like a 1% or greater slippage in the price movement of hedron. And I haven't really played around with the slippage for ICOSA, but I would assume that a couple $100 you probably get slippage as well with ICOSA. So in one sense, you could have kind of like almost equal levels of liquidity for something that's been out there for 7 months at this point to something that's been out there for 7 days, right? So when you, I mean, like,
well, so as of right now, this point in time, all of the ICOSA pretty much that's on the market came from an HSI buyback because no yield has been coming out. So as more yield comes out, it muddies that water a little bit, but still at some point, like pretty much ICOSA either represents an HSI that was given up, a B share that was given up to liquidation, or it represents a reward that was paid to somebody who gave up a B share.
Do you think? Because the floor under hedron, I think, and I'm going to make the argument that the floor under hedron could be more sturdy than it is under ICOSA because there's multiple pieces. You probably agree or see the same thing, right? Because you have hedron locked up in ICOSA under the ICOSA pool. You have hedron locked up in ICOSA under the ICOSA pool. And then you have people that are diehard hex and they want the ability to potentially scoop up an HSI with a better T-share rate at a discounted price. So it's like a double positive, right? Because you're getting a better T-share rate. And or maybe I just interrupted you before you got to this point of it.
No, let's keep going.
You can pick up a T-share that is from the past, so a better T-share rate, and you could potentially pick it up at a discount. So like I think about a floor, I think the floor for hedron is probably superior to the floor for ICOSA there. What do you think about that?
Yeah, so
I know you would have gotten to that.
So you're right. There not only is there the staking mechanism, but there's the main redeemability feature of it for on the liquidation market for hex stakes. So then like the floor is kind of tied to like the deals that you're getting on there. But the main thing is why I don't see it as much of a floor is because it's variable. We don't know how many HSIs are going to be on the liquidation market, and we don't know how many. We can predict it once it happens in the future. So, but we never know exactly. Like it's not as guaranteed necessarily as the yield in ICOSA. Even though that's not necessarily true because we don't know how much hedron is going to be burnt.
Because the thing that the doorway everybody this all hinges on is the demand for ICOSA, right? Because if ICOSA is garbage, then this kind of like whole thesis of both pieces are going to go down drastically, right? Like not hedron or not Hedron's not going to go down as much as Icosa because there's some utility to this in the near term, even if Icosa doesn't get used into the future, right?
Mhm.
So if Icosa goes to zero because there's selling pressure on there or whatever the case is, this can still have a positive impact on Hedron, where the other way isn't, you know what I mean, flipped around. It's not going to be the same thing there.
Mhm.
So both pieces are all hinging on like Icosa's utility or like the ability for the floor to stay relative. You know what I mean?
Mhm.
And
Yeah.
then once demand once coins start going on the market from this yield, it is going to be super interesting to see how that plays out. If there's enough demand to soak that up so that it keeps it up high enough. You know what I mean?
Mm-hmm. Yeah, no, I agree. I think talking about this from a theoretical perspective and then seeing what actually happens is going to be good to know, because we really don't, like, me personally, I think it's going to hold. Like, that's my personal opinion based on my evaluation of theory, but anything could happen. Like we really don't know what's going to happen, and we can argue till we're blue in the face about what's going to happen and what's not going to happen, but we're not going to know until we actually know. But I do agree with you that the Hedron floor is both it's both a factor of the staking yield that you can get because you can stake it, and it's a factor of what you can redeem it for on the liquidation market. Yeah,
and it comes into right, because I think that we probably all agree on that Hedron has way more room to pop at this moment in time. Could change over the next 3 to 12 months or something, but
I like to say nukes in China can change things quick. You know what I mean, though? Like, that's a funny way to say, like, things do happen in this world that we live in. But I have a lot of faith in what's going on here in general, like this energy of because it has to. There is trust with all of this stuff. Like, it doesn't care. I don't care what anyone says. But trust the right people, guys. I'm done calling people out. All that shit I was talking earlier I was literally geeking out, smoking dope, and fucking laughing. If anyone feels really hurt about anything I said about them, suck my balls. You're all fucking annoying me because I have done nothing but just been up here, been chill as fuck, and like tried to call it how I see it. And if you think that I'm some big deal, and why am I a big deal? Go fucking tell someone else what to do, please. Don't tell me what to do.
Somebody trying to give you a hard time?
No, everyone just has an opinion about like what I should potentially be doing with my anything. And it's like, when did that become a factor in my life? What you old fuckers say.
You just be like, oh, hold on, I got something.
No, but it was all just jokey, guys. I'm transparent, so people can also come at me too. Like, I tell people about my financial situation because I don't give a fuck. But if some people like to just, laugh, I'm like, I'm just trying to be honest with everyone so they can get a clear perspective of what it looks like. Okay. That's it. If I've had a lot more money than I do now. I just literally looked like I was homeless the whole entire time. So, you know what I mean? Like, some people are just different. Like, I don't have that desire in my heart to go to a club in Miami. I just don't.
Yeah, same.
And Sam, you could, like, just from an outside perspective, Sam could go into a club. He's a tall guy. He's extremely muscular. He could run the place, but he would feel like he was wasting time, and I'm not talking about when you're networking and shit, obviously, but like just in general, some people just are different. Like, people are like, do you want to be rich or do you want to be right? I'm like, I want to go to bed at night and not feel like I didn't work hard, because that's what my dad told me makes you a fucking piece of shit. And I just believed him when I was little. So I was just like, you better be working. And so everyone's different, guys. Just remember, some people enjoy their life all the time, no matter what happens. So it's just, that's what I like to push: emotional fitness, all that stuff. Guys, before we get off, I want to say, Crypto Sloth, I want you started a business. You're an absolute inspiration, by the way.
Well, thank
I
you.
100% support you. Okay. So tell the people a little bit about your business and what you're getting into in the last day. And I'm so proud that you're getting this done with your busy schedule.
Yeah, man. Thanks so much, and thanks for letting me talk about it on your stream. I appreciate it. But basically, I opened up consultation service. So if you want to buy an hour of my time to talk about, probably Hex, Icosa, Hedron, that is now available to do. I will say this, you know, I will continue to pretty much put out everything that I know for free on my YouTube channel. So like, you know, you could probably, anything we're going to talk about in a consultation, you could probably get for free from my streams and my clips and the guest appearances, like what's happening right now. You can get it all for free. You don't have to pay for it. But for anybody who just wants to sit down, you know, go back and forth, you know, if you want to have a bunch of questions you want to ask, you want to get them all asked, like all in a row, or like you want to talk strategy, or like you don't want to waste, you know, or not, maybe not waste, but you don't want to spend 10, 40 plus hours trying to understand all of this stuff. You know, feel free to grab a consultation with me and we'll chat for whatever you want for an hour, probably more. If you go on my Twitter, I think, let's see, I have my Twitter, I think in the private chat. You want to throw that in the chat?
Yeah, I'm going to throw that right down there.
I posted a tweet with all the details, but basically the rate for the consultations is $400 an hour. But for the first 10 people who sign up, it'll be $200 an hour. And essentially, all you have to do to get in on this is DM me on Twitter, and we'll get it all scheduled out and all the details hammered out. But yeah, that's just a service I'm going to be offering. Please, by no means, feel like you need to do it. It's just for those that want to. Yeah.
And there's a opportunity to really shorten the learning curve here, right? You can ask GRC. The reason I am sitting here is because GRC did what you just did. And he was like, DM'd me. He said, yo, bro, can I pay you for some of your time to just learn some of this stuff? Like, that's awesome. I'm super excited for you. I think.
I want to highlight that. Like, this is a real fucking thing. Some people don't have guidance, motherfucker. Some people I wanted guidance. I wanted whatever the fuck he had, and I wanted to know how he had it. And that was a different category. Like, this is more like a specific subject, but like he had something I wanted. One of those things was ginormous muscles, okay. And the other one, but the other thing was that he was smiling all the time, and I just wanted to know how. And I just kept, how do I do it? How do I end up like that? He's like, yeah, I have to work all day and then I got nothing to do, but I'm excited and happy as fuck. I'm just like, I want to die. Like, my life's great and I don't know how to I don't know how to feel good about it. And, you know, that was stuff I had to work with, not like a therapist or anything. I had to go out of my way and find somebody of a skill set that I was looking for. But I wasn't looking for what he was talking about in the YouTube. I want to go all the way. I know they're liable to say shit on YouTube. Are you kidding? Sloth can't give. Come on, guys. You know, what do you think these guys do in private? They just fucking dig shit up. Like, they're like little moles, man. And you can't say everything, Sam. You just can't, because it's like, oh, Johnny got his first check for $5,000 and he put it all in a WAATSA NFT and then fucked up. Like, so it's just, once you get into some really nuanced stuff, getting a consultation, in my opinion, is the most fast, effective, and direct way. Because in my life, I like time. Time's my big money thing. And I wanted my learning curve to be over. I was like, nope, I want to be done. I want to talk to this dude for a couple weeks, a couple times. Get this over with. Then we became friends, of course. But guys, that was incredible. I'm so excited for the future. We are so early. We're just little infants in an embryo of financial, like, and there's paper hands everywhere, guys. It's paper hand USA. Scoop it, baby. Scoop that. Seriously, scoop it slowly. You don't have to, if your heart's beating to make a move, you need to sleep on it. You shouldn't be beating about it. Do some math, talk to your buddies, make a move, don't over leverage, and don't sell that shit. Get more of it by producing more yield. Okay, producing more coins. You want more coins. You know what I mean? Get some more coins, guys. Everyone have a great day. This has been fucking incredible.
Hey, Wednesday.
Yes.
I think Wednesday. 6 p.m. EST, Sloth and myself, GRC, if you'd like to come on, we're going to do something Wednesday evening, 6 p.m. EST. 6 p.m. So that's going to be another awesome episode.
And guys,
looking forward to it.
This is a sneaky one. There's some alpha alert. I was talking to Dip Catcher 101, and he said that we're launching before Vegas golf tournament. He kind of slid that to me. He didn't say when. I'm doing a marathon. I want to cover it. I want to cover all of it, and I want to see the yield, and I want to see the differences between Echo, Hedron, in some of those plays. I want to talk about all of it for hours on end. Okay, guys, everyone have a great day.
Farming with my stables in the decks. I'm holding IRA and never flex. I'm sticking all this shit on Everest. And I'm balling ECF. Farming with my stables in the decks. I'm holding IRA and never flex. I'm sticking all this shit on Everest. You see, the problem was these epochs. Now I'm printing daily, man, who need that? I check my APR on VFAT. And the regulation printing big stacks. I simple swapped it for some BNB. Took my shares and I made OP. What's going on, guys? It's your boy D.